I mean, there's a decent bounce which is there. We'll see how far it goes. The bounce started, I'll tell you exactly, at 225. You know, we were at 17,512 and it is already about a 70-odd point bounce from the day's low that we have seen. So we'll see. Dipan Mehta is director at Elixir Equities. He's joining us right now to take some questions. Dipan, great to have you with us here. Thank you very much. How are you looking at the screen today, and what any thoughts at the price action so far?
Yeah, good afternoon, Prashant, and thanks for having me on your show. Yeah, actually, I'm watching the market and with surprise at the correction which has taken place today. But I heard your initial commentary and I agree with you that there can be only so much of decoupling. And at some point of time, I think corrections in global markets are going to catch up with us, and that's what's taking place. The most disappointing aspect, of course, is the FI figures have turned quite nasty and negative in quite a large quantum. And that certainly is never a good sign. But I think if you're a long-term investor and you're looking at a 3 to 5 year type of a view, I think these are great times to buy gradually into good quality businesses. Typically, when the market starts to rally, you never really get a chance to get into these companies, but these are good opportunities. Something which has fallen maybe 10-15% from its recent high, maybe a good entry point and provide some margin of safety.
Okay. Well, that's on the Nifty. There's been a decent enough bounce that you're seeing. Even the mid-cap index and advanced decline seeing a bit of a recovery. You know, with our market, the last hour has really been crucial, and so many times it's staged last hour pullbacks. Is the start of something big? We'll find out. In terms of other stocks, Dipan, hi, good afternoon. What clearly stands out today is selling in consumption names. Consumer is something which was leading this market. And if you look at the top 5 or 6 losers, they're mostly consumption names. Tata Consumer, Hero, Mahindra and Mahindra. Your view?
Good afternoon, Anuj. I think it's more to do with the fact that the stocks which have rallied the most, that's where the selling pressure is coming through. And I wouldn't rule out even local traders, investors trying to book profits over there or maybe cut their losses in these companies. And these are the favorite companies. They've been reporting good numbers. The commentary has been positive. The outlook for the next couple of quarters in terms of earnings were great. And in a way, I think a few weeks ago, there were good trading opportunities. And some amount of sell-off is taking place on account of lightening of positions by the traders over there. I don't think we are seeing any material institutional selling in these counters, especially not of the long-term nature.
Okay. You know, there are some technical changes in the Sensex and FTSE indices which will take place. Vivek has been, of course, tracking that. He's joining us again to recap the changes in the flow-wise impact. Vivek, over to you.
Well, that's right. So today's trading session, we are actually seeing quite a bit of activity, especially among some of the names that we'll be highlighting. Now, the main reason for this particular change and the increased volume activity especially is the fact that we are seeing quite a bit of changes as far as the FTSE index is concerned, and also some weight changes in the Sensex. So now, remember, these announcements were done prior. The FTSE announcement was done exactly 1 month ago, and the effective date is Monday, which means that the adjustments are being made in today's trading session. Sensex, the announcement was made last week, and it's going to be interesting to see, how exactly these stocks stack up after the adjustment comes into effect. So some of the buy flows as far as the Sensex is concerned is in Kotak Mahindra Bank and IndusInd Bank, while sell flows are in SBI and HCL Tech. When you're talking about the FTSE, these include inclusions, exclusions, as well as weight changes. Some of the key stocks that are on the radar are Indian Hotels, CG Power, Gujarat Fluorochem, Schaeffler India, Linde India, as well as Motherson Sumi Wiring, all of which are seeing buy flows in today's trading session. India Bulls and Tata Power are seeing sell flows. Remember, active fund managers typically have positioning into this particular stock as soon as the announcements are made, even do a little bit of pre-positioning. So don't be surprised if some of the stocks you see are reacting quite opposite to the flows that you're seeing in today's trading session.
Thank you very much for that. I mean, those are adjustments which will take place, but largely, as Vivek also pointed out, technical in nature, one-time kind of adjustments, no more, no less. Let's just take a quick look at the broader market space and see where else we are seeing activity. Vedanta is down 7%. I mean, this entire tire space which went up like a rocket yesterday, and I was scratching my head wondering what's going on. I mean, They were being bid like, the market for tire stocks is going to not open today. MRF, Apollo Tires, Tata, Balkrishna Industries. I can't spot CEAT with any large cuts, but the ones I mentioned are down between 5 and 6% on some of the highest volumes so far. Any thoughts, Dipan, on these tire names, if you like any of them? And then do comment, if you will, on Vedanta as well. There's been a bit of flip-flop in terms of where this investment is going to come through in the listed entity or at the holding company level. So the market doesn't like that.
Yeah, Prashant, let's go with Vedanta first. And that's why, I think the market has this issue with corporate governance standards of this particular management. And again, those issues have cropped up over here. Technically, I think all Vedanta's businesses in India, or rather the group businesses in India, are in Vedanta Limited. And even at the recent investor meet, there was a lot of excitement around this particular semiconductor. And at that point of time, it did appear that it would all happen through Vedanta, the listed company. And now this particular step of the management certainly has not gone down well. And as I said, I think, that with Vedanta, they have a bit of a history as far as corporate governance is concerned. And this certainly doesn't help the interest of minority shareholders. Coming specifically to tires, yes, even I was surprised with the up move which we saw over there. And the best pick within the space still remains Balkrishna Industries. If you have some kind of opportunity, or other, I would say, contrarian investing strategy, then Balkrishna certainly, is a good stock to look at. It's corrected significantly, and last couple of quarters have been a bit disappointing because of the way Europe and US markets have shaped up. But once the markets start to turn around over there, given the expansion and the backward integration which they have done, I think they are well on their path of increasing global market share from 6-7% to 10% and maintaining that consistent 15-20% type of bottom line, top line growth rate, which we have been seeing in this company. So very positive only on Balkrishna Industries. Other tire stocks I would avoid on account of competitive pressures. And overall, I think pretty patchy track record per se.
Okay, well, by the way, the bank nifty has now recovered over 250 points from the low. The low was 4502. Now 4600 was that zone of 5 and 10 day exponential moving average. Now it will be interesting to see if this recovery can continue, or there's some selling which comes back on this recovery. The other space to track, of course, is IT, and a couple of them which stand out. TCS, which is down 2%, and Emphasis, which is down almost 4%. I'm pointing these two specifically because they I believe have exposure to FedEx, which is something we had discussed in the morning as well. So maybe that's Emphasis, not Infosys. Emphasis is the stock that I was referring to. Dipan, your view on some of these IT names, and we're getting very close to 52-week lows on most of them.
Yeah, that's right, Anuj. I think it's quite disappointing. But, in about a month's time, 4 weeks or so, we'll be into another earnings season. And we all are going to quiz these managements as to what the demand scenario is. I think until the con calls of the last quarter, they were pretty confident that there is no major disruption or no major pressure on demand. But let's see how this quarter has shaped up and what response they're getting from their customers. And by and large, I think the industry has got great long-term prospects. But yes, I think you will have to see this patch of underperformance or correction for the next maybe couple of quarters or so. But when things turn around, they turn around so well, and you don't really get a chance to buy into these companies as well. So I'm remaining invested in Emphasis, Infosys, TCS, Tata Elixir, some of the names that we own, and riding out this particular bearish phase in them, and hoping that if we have a slightly longer term view, these companies can still deliver decent outperformance over the Sensex and the Nifty.
Okay, well, for now, let's discuss a couple of stocks that we normally don't talk about. It's SJVN and NHPC. Basically, in the hydropower space, Nimesh is joining us. Nimesh, there's a very interesting view from CLSA.
Well, absolutely, Anujana. And for the first time, I'm seeing an influential broker like CLSA putting out a note on NHPC and SJV, and they've initiated coverage on both the stocks. And as I said, this is maybe the first institutional brokerage to have a coverage. On SJV, and CLSA has initiated a buy report with a target price of 42. They believe that the stock has a potential to double in the next 4 years. SJVN, according to the CLSA note, is firm plans to reinvent itself as a renewable power, power as a power as a service play, and with a 1.6 gigawatt of new hydropower projects and 14 gigawatts of new pumped storage projects. Look at the revenue projections that the CLS has put out. After just reporting 7% growth in the last 5 years, now CLS is forecasting earnings equity, earnings to double in the next 5 years from now, EPS to increase by 45%, and ROE to expand by 365 basis points. That's a huge number that CLS has put out. So, interesting note on SJVN, a buy rating by CLSA with a target price of 42. So that's SJVN. The second stock is NHPC. Again, first time I'm hearing of getting a report from a foreign brokerage like CLSA on NHPC. They have a buy rating with a target price of 51. Now NHPC is among the top 3 leaders in the RE developers, and is one of the largest players in hydropower projects. Now, even in NHPC, look at the numbers that they are quoting about. They believe that NHPC is going to be a key beneficiary of India's net zero commitments, which will lead to a big earnings potential and earnings growth for a company like NHPC. So therefore, CLS is forecasting revenue earnings equity of a growth of 131% over the next 4-5 years. With almost 7.5 gigawatt of work under construction under NHPC. In fact, they are also expecting, even for NHPC, a 45% growth in EPS and a 217% growth in ROE over the next 4 years. So they're talking about big numbers, and for both NHPC and for SJVN, CLS put out a note with a buy rating and big upsides. On SJVN, CLS believes the stock can double in the next 4 years.
That's indeed is interesting. Nimish, first of all, we don't talk about these names at all. I mean, it doesn't come up at all. And then on top of that, for initiations like this, quite something. Let me put that to Nimish. Thank you for that. Let me put that to Dipan. Dipan, would this prompt you to look at these companies a little bit more in terms of?
Well, I think the way Nimish puts it, really compelling stories at this point of time. And renewable energy certainly is one of the investment themes that many investors are chasing. And, a lot of money has gone into the likes of Adani Green and Tata Power per se, and even JSW Energy. I think the private sector energy companies, power companies going into renewable are getting higher and higher P multiple. And then why not these companies as well? So sure, I think these stocks can certainly do well. My only issue is the PSU tag which they have, and generally PSUs, even after 10 years and new government, so much of kind of enthusiasm and encouragement given to them. If you see on a longer term basis, they still underperform the private sector players. So you could have a trading kind of a run in these companies. They're very cheap. You can justify buying into them. But from a longer term investment, I still prefer the private sector renewable energy companies.
Okay, Dipan, stay with us. What we'll do is we'll take a quick break here. We'll come back and we'll take stock of the market once more. Down about 304 points. We're off the lows by about 60 points or so. So far there is not a extension of this move in any great way, but it's not coming back to the lows as well. I mean, 40 minutes of trade still in front of us. We'll come back. We'll also have Chandradeep Singh and Varun Daga of Giri Capital on markets when we return on the other side. Stay with us.